What's up, everybody? I'm here with Mikhail Gurevich. He is a venture capitalist, an expert in Bitcoin and cryptocurrency, and just kind of a wizard with anything finance. I remember you and I met. You were speaking at Microsoft, and you're like, you're talking about like kind of business venture capital, and you asked if there are any questions. I said, you want to invest in my company? You said no, and then we kind of became friends after that.
Thank you. Pleasure to be here.
So you're a New York City guy. The pandemic hit. You're living down in Florida at the moment. What do you think the future is for you? Do you think you'll stay in Florida, or do you think you're going to be back in New York?
I'm going to stay in Florida for a little bit longer, but eventually going to be back up north. I don't know about New York City specifically, but probably. Well, I now have kids, as you can probably hear.
Yeah.
So it's a little bit different having kids living in the city versus not. So I'm thinking maybe Connecticut, New Jersey. Also the government of New York City and New York State is not making it easy to come back, right? So before you were
Correct.
paying like ludicrous amounts of taxes, highest in the nation if you live in New York City, even higher than California, because California you have state tax that's higher than New York State, except now it's not going to be. Or now New York State has bypassed, and then they took number one spot. But before, if you include New York City, it's you're paying taxes to be in the best city in the world, right? Infrastructure, just life, energy, business, connections, everything. Right now, all of that is shut down and gone, basically, for one reason or another. And one thing I really wanted to see is kind of like, there was a chance for the government to come back and say, hey, we're going to be pro-business, we're going to be friendly, we're going to encourage all of that, growth, people coming back, for jobs and everything, but they're doing the opposite. So it's a little bit unfortunate to see that. So having said that, it's like, yeah, I'm going to be back in Northeast, but New York City, we'll see. I might be completely wrong, but, in every system that humans are involved with, there are overreactions, right? You look at the market, typically why we have wild swings, something's overpriced, something's underpriced, is because that's a human nature, right? To overreact a little bit to things. So I think what we're seeing right now is overreaction to a number of events that have been happening in New York towards the left, right? Not to get too political, but that's going to result in a number of policies that we've seen. We've seen what those policies do to like Detroit and a number of other areas, right? So I think what's going to happen, it's my theory, is New York is going to get a lot worse for a number of years, and then people are going to wake up and say, okay, maybe time to like really change these things, and then it's going to come back up, right? But the trend right now is to the downside, and I think the faster we get to the bottom, the faster we're going to come back up.
The thing, without getting too political, that most New Yorkers our age and younger don't realize is New York was a wildly dangerous city in the 1980s. Times Square was a place where prostitution, drugs, murders, that was like the main tourist attraction.
In the early 90s. You don't have to go that far.
Yeah, I mean, both, right? Like, I remember I visited New York City when I was a child, and a homeless man, like, lunged at me. And, like, that was my initial impression of, like, New York. I think I was with my aunt, and, like, she kind of pulled me out of the way. But, I mean, to be, like, a 4-year-old kid and have, like, homeless guys going after you, that was weird. And I think people forget that because statistically, New York has become one of the safest cities in the United States, if not the world, based on the population and the number of reported violent crimes. So people really forget how bad it used to be. And I'd love to hear your story. You're one of the most impressive people that I know. You've gone through Y Combinator. You're an LP in VC firms.
You should meet some more people then.
But I'd love to hear your story. Kind of tell us a little bit about how you got started and what you're working on and what you're doing.
Story, I mean, not to go back too far, came here in the 90s from Soviet Russia, so to speak. Everyone in my family was an engineer. My parents, both engineers. So, kind of grew up a little bit in Brooklyn. I kind of caught that like late 90s Brooklyn, which was very interesting. So 97 to 99. It was remnant of the times that you were talking about. So I went to a couple different schools in Brooklyn, from like probably the worst school that you consider. If you go to like Google Maps, you look at the rankings. It's interesting. No one ever reads that stuff. Like, why would you read Google reviews? And not to digress, but it's interesting area of the web. Anyway, so ended up moving to Connecticut then afterwards. So public schools in Connecticut were a little bit better at the time. So my parents decided, we kind of should move because of the school system, which was the right choice. I mean, I ended up going to grade school in Connecticut. They went to college in Boston, studied engineering. And at the time, I didn't know what the hell I wanted to do. But I have been programming since an early age. Actually, a friend of mine got me into hacking computer games when we were like 6 or 7. I remember when. To put the date on it, it's like when the original Mortal Kombat came out in the mid-90s. That's about the time I get into, and the reason why is because so you can put into the command line, you can put a script that will basically give you like extra powers in the game. And at that point, something in my mind clicked, and I went from like, I remember if you remember when you were a kid, right? You think about like, oh, adults know everything, and there is like how it was. Maybe you get to a point where it just like clicks for you down the line, but the world changed at that point in time for me when I went from like, oh, like this is how stuff is to like, oh, wow, you can change things, right? So everything is malleable now. And I was like 6 or 7, I don't remember, maybe earlier. Because I didn't start first grade yet, so I think I was like 5 years old. So I realized you can like change stuff that adults make. So after that, we started hacking computer games a little bit more. I took a couple of classes, learned, I think it was QBasic at the time. So it was a while ago. Anyway, and then, let's see, so studying engineering in college, got into, I was interviewing at a bunch of like engineering schools. I think I was a freshman. Not school, sorry, engineering internships. And a buddy of mine, we're still friends, he was doing public relations, and I think he was interning at like New York Times. And his boss, this was 2003, summer of 2004. So his boss said that like, hey, there's a bunch of, it was summer of 2005, yeah. So his boss said, hey, like maybe there's like a couple of Harvard professors that I know, they're putting together this experimental program. You guys should check it out. So we looked at it, and it was Y Combinator. So the first class that they were kind of starting us, we're like, hey, we'll apply. So we applied to Y Combinator. Somehow got in. I have no idea how, because everyone else that they were interviewing, you go there, you can see who the other people that showed up. It was in this like dingy garage space in Cambridge. I think. So there were 3 of them, right? Paul Graham, Robert Morris, and Trevor Blackwell. And I remember at the interview process, Robert Morris was grading homework for his class in MIT. We were there for like an hour and a half. He did not look up once. I don't think he knew who the hell we were. So it was really funny. So Paul Graham was asking most of the questions. Anyway, so somehow we got in. I don't know how, because everyone else was way smarter than us. And we were also the second youngest group. The youngest guy that got in was Aaron Swartz. If you kind of know your internet history, very smart guy. He was a kid at the time. He was like 14 years old or 16 or something. I don't remember, but anyway. So that was a very good experience. Kind of got into, it allowed me to like step up my programming a little bit. Gave me exposure to like everything that's out there beyond just, if you're an engineer trying to learn how to program, like what's the real world like. So it's a little bit of that. It was cool. I think they gave us like, I want to say about 18,000. It was 6,000 per founder. So you wanted to have 3 founders on your team, because then you get more money. And I remember we got 18 grand to spend summer in Boston programming and like starting up our company. And at the
what
time,
was your company?
What
was your company?
Oh, it was called ClickFacts. We were basically trying to solve the issue of click fraud. But yeah, we thought we were like hot shit. We got all this money, like we're living large on $18,000. Three college students. But it was that money lasted us. The cup ramen diet was great. So yeah, it was. We were trying to solve the issue of click fraud, which is basically when like your competitor is clicking on your links. So to put in perspective, right, it was like 2005. So the whole like digital advertising was still in its infancy, and people were trying to figure out what to do with it. How do you optimize it? I mean, even at that time, like big companies were spending hundreds of thousands, millions, tens of millions of dollars in ads. It was before DoubleClick got acquired by Google. And anyway, it was like I feel like the internet, we were transitioning from like Web 1.0 to a Web 2.0. I don't, if you recall that terminology, Web 2.0. So that's when that move happened. It was a good time. Looking back on it, it was like the early stages. It was actually really funny. I remember a story. So one of the guys that got in, Sam Altman, I think, so he ended up being the president, and I think now he like retired. But his startup was basically this like location. This was way before iPhones, by the way. So keep that in mind. This was like when the Nokia like power brick ruled the universe.
Those things were indestructible.
And, Crackberries just started to become popular, and so he was writing the software to basically allow you to like see where your friends are, to like allow parents to track their kids. Revolutionary. And I remember he was walking around with like 5 phones in his pocket to like test different brands, different like operating systems. It's really, every time you see him, his pocket's just like full of phones. So it was really, that was the times that, you kind of fondly remember, because right now,
so what happened with your company?
Technology is completely another level.
Where did you guys go once you went through Y Combinator? What was like the next thing that happened with you guys?
So we did it. So we kind of built out the company for a couple of years. We moved to California because that's where most of our. So we brought on this like more senior guy who became the CEO. He knew how to like run businesses, do this other stuff. So 2 years in, basically it was me, my cousin, and a friend of mine whose name is also Mikhail. So the three of us were original founders. Me and Greg, my cousin, so we were like the technical guys. So after building out the software for a couple of years, we didn't want to move to California. We wanted to stay on the East Coast. So we kind of decided to part ways. Obviously, friendly, everything. So we moved the company to California, San Francisco. Our third co-founder, he also moved over there. And I started another business, another company afterwards, focused on kind of aggregating financial information. So we were trying to solve the issue of, how do you monetize content online? Because it seems to be like, even now, it seems to be a sore topics on a number of platforms. Because at the end of the day, like, how do you monetize? Like, who should be paying creators and artists? Like, what's the fair way to compensate all of these guys? Right, so it's the eternal question. So we basically came up with this algorithm and a system to be able to compensate the artists based on the amount of time that people view their content. Right. So initially we kind of applied that concept to the financial landscape, so like newsletters, subscriptions, all that stuff. And the idea was to kind of branch out, but we we never made it past kind of the initial sort of startup phase. So that was unlike ClickFacts, this was more of a learning experience in a different way. I decided to go get an MBA because we grew the company pretty quickly, and the skills that you need to run a company and manage people are different skills than you need to have when you're an engineer, right? So I said, okay, let me go back to school, kind of see what the deal is with the whole management system. So I got an MBA. I studied, obviously you need to take GMATs and stuff. So it wasn't right away. It was like a couple of years after. Anyway, got an MBA, then, started Dominion Capital, basically halfway through the program with a couple of guys. So I was interviewing at a couple of different investment banks at the time. And then what ended up happening is I stole a team from Morgan Stanley, a couple of guys. But they wanted
for everyone in the audience, let's talk a little bit about Dominion Capital, because this is not like a small venture with $2 million. Can you tell us like a little bit about the size, the scale, what projects you're working on? Because this is like a big thing.
Yeah, so recently we hit 150 million, which is pretty nice milestone for us. We don't really market the fund internally. For the most part, we've been in business for, it's been, so this year is going to be, 10-year anniversary of the fund, in a couple of months actually. So, pretty important milestone, at least for me. Initially we started with doing just like one thing, which is basically the syndicate calendar. And for those that are not familiar with kind of financial landscape, it's basically so there is a little bit of an arbitrage that exists between buying securities, specifically, companies that are going public, doing an IPO, right before you do the IPO. So, when the banks do a book building process, I'm simplifying this a lot. You can go in and ask for shares of these companies, right? And then the idea would be that the bankers would price the IPO or the secondary or whatever, any new issue that they do in such a way that the aftermarket demand is going to be, higher. So you can, so there's an incentive for investors, right? And there's much, much bigger funds, pension funds, all sorts of investors that come in and buy millions, hundreds of millions of dollars of this paper, right? So the bankers need to do a good job where they price it in such a way that it opens higher, right? So there's incentive for investors to come in and participate. And on the other hand, they don't price it too low and give away, unnecessarily large amount of the company or whatever that they're trying to sell from the current shareholders, right? So if you're running a business, you want the bankers to price it as high as possible, right? But if you're an investor, you want it so like that's the banker's job in this case. So anyway, so we were doing, the syndicate strategy, trading a lot of the stuff, and that in parallel, we were coming out of the 2008 recession. So in parallel, kind of I launched another strategy doing hard money lending. So we started doing it like passively, and then over the last so actually a couple of years ago we spun out that strategy as a separate fund we called RD Advisors. So doing hard money loans, working with local developers. There's actually a huge supply crisis going on right now because there's lack of housing all over Northeast and in many other parts of the country too. There's huge constraints on the lumber supply chain. So lumber if you look at lumber prices, they're like through the roof right now. Maybe a function of the pandemic. People are sitting at homes, realizing they need that extra room for the office or more kids or whatever because they're not going to the office right now.
Well, I mean, I'm doing like some consulting work with some very large private offices or like family offices, private money, and there's a big flight from commercial office space into residential office space, and the use of a home has changed, right? Like 2 years ago, your home was a place you would go to sleep. Maybe your family would be there. Now it's both your office and the place where you live. So a natural occurrence would be wanting a bigger home. And from 1940s till today, there's been a constant increase in the size of square foot of homes. I mean, not in New York City, but like throughout the country, it's a big trend.
New York City has been the opposite. There's just like keep on dividing. Did you see that? There's a video it's like a month ago where they were showing, I think it's like it wasn't even one bedroom. It was like an apartment. If you want to use a bathroom, you have to go like 2 floors up.
No.
It's crazy.
Yeah, and there's this weird thing of human beings don't really need a lot of space to live from a like function standpoint, but we're being kind of coached into the idea to constantly like have a bigger home and have more space, and that's almost feeling like a requirement. But yeah, I mean, I think people are buying more houses. I think more people are moving out of cities. I think that people want to feel secure, and they're concerned the stock market could crash. They're concerned, after March of last year. So it feels like a flight to safety to a certain extent. And then there's also a bit of yield-seeking behavior where, IRR on like, what are home prices up 100% for the year where you live in the properties you're looking at?
They're definitely up. Yeah. For sure.
So you've got the hard money lending that you're doing, and you're doing that with like small companies and like.
We work with banks all the time, right? We have credit lines. We refer people. So like whenever someone, and we specifically will work with local developers, right? On the ground in Boston, Pittsburgh, Columbus, Ohio, New York, New Jersey, not New York City, just like New York metropolitan area, Long Island. But what happens is, after these guys finish, home, right? What do they need to do? They either put some kind of tenants in there, and they need to refi, or they sell it, and whoever's buying it needs a mortgage. So we're always working with banks, right? In all sorts of capacities.
There's so much regulation after 2008 for
That's exactly right.
A large bank that they can't give anyone who needs a loan. They can only give people that don't need a loan. I mean, for the most part.
Well, they could. It just takes a really long time. That's the issue. So for these guys, it makes a lot of sense to work with us, where they might pay an extra couple of points on the rate, but we can close in a week. Right? There's no bank that's going to underwrite unless you have a multi-million-dollar relationship with them, and even then, it's because of the regulations that you mentioned that came out of the 2008 crisis. That's been the case, and honestly, the system works quite well right now. Very efficient. I mean, the rates have been coming down. And the banks are still exposed to this sector. Just what happened is now they're not giving out loans to everyone directly. They're going through intermediaries like us that do two things. One is they take on a little bit of risk, right? That de-risks the banks. And then two, we do the underwriting on our end, right? So that frees up the banks to deal with the regulation while we make sure that. And because our capital is at stake, we don't have FDIC, we don't have multi-billion-dollar support, and then like that banks do. So like for us to lose our capital, it will hurt a lot more than for a bank losing their capital necessarily.
That makes sense. That makes sense. So,
right. So
it's almost
the burden is on us to make sure that we do a good job underwriting these deals, right? So
what percentage do you charge for somebody? If I came to you and need $5 million, what would be, let's just make it very simple. I own a piece of property. I need a construction loan. I need $5 million to build, 4 homes on the lot or something like that. What would my APY be?
So we usually bifurcate this into two pieces. One is the acquisition loan, right, for the land. That's what typically happens. And then the second part is the construction loan for the construction of the properties. So typically most projects, I want to say more than half, are really like rehab, so you're not dealing with ground up constructions, but we do some of those as well. So in the ground up construction case, you buy the land. Say you buy the land for like $2 million, so we'll give you on the land typically 50-60% LTV, but on the construction part we can go up to as much as 100%. In the sense where if it costs you $3 million to build a house, or in this case, let's say, 3 houses or 4 houses, so we'll do $4 million, right? $1 million per house. So the way we will do it is, as you build the houses, so you got to put in your own money first, right? You put in the foundation. You're done with foundation, we'll release, let's say it's $500,000 to do the foundation, just making up numbers. So as soon as that's done, we'll send an inspector, they'll inspect it, we'll release the money. Okay, that's done, right? And then, you kind of follow step by step. First floor, release next amount. Kitchen, appliances, will release whatever you spent on that. So we would finance up to 100% of the construction. So it's a very, I would say the system has gotten to a point where it's pretty efficient. So back, 10 years ago, hard money lending was still kind of like a new concept, but now there's a lot of people are doing that. Although I have to say a lot of funds got blown up last year because they were doing a number of stupid things and getting, I want to say, doing risky stuff. But it's good, these kind of crises flush out sort of the garbage out of the system. So, as terrible as the pandemic was, obviously, events like that tend to stress the system and make it stronger in the long run.
That makes a lot of sense. So in addition to so you've got a hard money lending, which is different from Dominion Capital. Dominion Capital.
So we spun out that strategy. We used to do everything in one fund. We spun that out. It's called RD Advisors right now.
Okay. So you've got $150 million Dominion Capital. You got RD Advisors over here. And then you also function as an LP for a lot of different funds. Is that under Dominion or is that a third entity that you have?
Yeah, I have all my money in Dominion, so we basically fund. So we invest into other funds, like so. For example, if we want to get like exposure to like some VC, so we have a small venture capital portfolio. We just don't spend a lot of time there, although we like that asset class. So we would allocate money to certain money managers in venture capital sort of sector that we think have a leg up, for example, or we just like doing business with people, and we think they're good. Not only good people to do business with, but they're smart, they're driven, they know their shit, and we don't have time to deal with it, so we will allocate money towards them. We've done it in kind of crypto space a little bit. We've done it with the traditional VCs a little bit, but we also have invested directly in a number of venture capital companies. Although that's the smallest part of our business, just because that's not something we specialize in.
You were talking about crypto. Did you have exposure to the Coinbase IPO?
Yeah, we had exposure through a couple of different funds that we invested in.
What stage did your funds get into that?
Let's see, without naming names, I gotta remember the early, so one was in 2017. I think they were at like $18 billion valuation at the time. And I don't remember where the other one invested, but probably around the same time. 5x, 10, 6x, something like that.
It's pretty amazing because the valuation today is what, like 80 billion, give or take, 60 billion, somewhere between that.
Yeah, like 100. I think they opened up like 100 billion.
That's totally crazy.
Yeah, nuts. Although the growth rate is substantial, I think the pricing is probably somewhat reflective of that.
You've been investing for a long time and consistently putting solid amounts of capital into cryptocurrency. What made you initially get into it?
So good question. That was a while ago. We were talking about it, I want to say. So we seriously started getting into it around 2016, I want to say. Maybe even a little bit earlier. But I actually started
$1,000 a coin, give or take, like $1,000 a Bitcoin.
Way under that. It was like, I remember when it broke $100, but we didn't start investing into it until much later. I think we started investing into it when it broke like $1,000, so somewhere around there. But I did get into it just from an engineering kind of point of view. It was very, very interesting to me. So I started mining it. On my laptop, like it was around 2012, sometime around there. So I started like getting into the code, looking at the mining aspect of it. So the whole like system was very interesting from like just a theoretical point of view, right? So I played around with it for a little bit. It was kind of cool, and I sort of forgot about it for a couple of years, and then I had a couple of friends that were using it for buying stuff online, so to speak. Back in the early days, probably textbooks. I don't know what you could possibly buy.
Maybe prostitutes or drugs.
Back in 2012, but that whole system ecosystem started developing, and then once it gotten above about $1,000 a coin, we really started looking into it from a point of view of like, okay, how can we why do people buy this stuff? Why do we want to use it? And I think a lot of people now don't even understand it because they've never tried it. So if you've never sent a Bitcoin to someone, I highly encourage you to do that, because as soon as, I would be talking to like the staunchest bankers that would swear up and down, like, oh, it's going to zero. And like, I've had so many conversations over the years with people, when they tried to do a simple transaction, the mindset completely changed. So for me, that was basically, I want to say about 5 or 6 years ago, when we were trying to pay for it. Was, we weren't like buying drugs or anything. It was, we were basically trying to pay to go on a trip somewhere. It was like we're doing like a mountaineering trip or something. And we were actually going to do the E5 trail through Europe, and we're trying to like figure out how to send money to someone. So like I ended up getting paid in Bitcoin from a couple of friends. And I was like, all right, this is great. Why do we need to deal with the banking system? Try sending a Swift wire for $40. It's like they're going to charge you $60 to send a $40 wire. and it's going to take 3 days, and it might get lost somewhere, right? But you're sending Bitcoin instantaneously, quickly. It takes like no, right? So, and I think that there's also, to be clear, we need to make a distinction between a form of payment for something and like a store of value and a medium of exchange, because when you pay for things, for the most part, you pay it with your credit card, right? And when you pay with a credit card, you're not using your own money. You only settle with a credit card company down the line. If you don't get a product shipped to you, if you don't get the service that you want, right, you can always dispute it, and the credit card company will go to the bat for you, right? And I think a lot of people don't make that distinction, which is I think it's an error to think about it. To think about Bitcoin that way, where you're going to pay for coffee with Bitcoin. Like, obviously you can, especially with the Lightning Network, but I think it's a stupid thing to do, right? Why? It's like using a debit card. Why would you ever do that? It makes no sense.
I normally make the analogy when I talk to people. I say, like, Bitcoin is 1,000 times better as a store of value than gold. Like, if you wanted to move $1 million of gold from the United States to Russia, that would be a multi-day problem, tens of thousands of dollars, incredibly challenging to do, where you could send it in 20 minutes for under $20 with Bitcoin. But I don't think today Bitcoin is a great use of currency to buy a cup of coffee. Like, you could do it, you could maybe route it with a Lightning Network, but there's probably better layer 2 protocols out right now than Bitcoin, and I think it's the best store of value. When you were using it on your trip, it actually probably functioned better as a currency than it does today, because the transaction fees were probably pennies, right?
I mean, you can still send stuff and pay pennies right now. It's just going to take a little bit longer. But yes, yeah, for sure.
That's pretty interesting. So you started investing professionally about $1,000 a coin?
We started buying stuff a little bit here and there, looking at other coins, looking at Bitcoin, obviously, for the most part. We started getting into the ICOs when they became pretty hot a few years ago. It was like 3-4 years ago now. But when the ICO craze was happening, that was already like mainstream, right? So we were in it a couple of years before that, specifically for the reasons that we discussed. And then when the ICOs came around, that was that was like a storm of just insanity.
For your investment thesis, what percentage of your capital do you allocate towards Bitcoin versus alternative coins or coins that aren't Bitcoin?
So right now we're basically in Bitcoin. We're in a mining company. So I'll say it because it's public information. It's called Bitfarms. That we're still invested. We've been investors for a number of years now. We've invested in them, and we gave them $20 million about 2.5 years ago to build out the infrastructure for their mining facilities. And right now, I believe they're one of the largest, if not the largest, miner by Bitcoin production in the Northeast region, at least out of all the public miners. So we got Bitcoin, we got Bitfarms. That's our exposure to the mining sector. We can get into reasons why or why not. It's better than owning outright Bitcoin. And we're invested in two sort of blockchain-focused venture capital companies that they have invested in a number of infrastructure, sort of second, third layer protocol companies, tokens, all that stuff. So I don't have. So majority of our business is actually working with public companies on structured financing. So I don't have. I like the venture capital space. I just don't have the time to look, interview 100 companies a week and make those decisions. There are people way better, way smarter than me that can do that. So that's why we like, that approach.
It's really hard to invest in blockchain or Bitcoin related companies and get a return that's better than just investing in Bitcoin. Like, if you start to think about things, like if you use your denomination in your head as Bitcoin, it's pretty hard for a lot of these companies to keep pace with that type of an investment. And I'm not aware, outside of Coinbase, of a lot of really big companies that have come out of that space. What are your thoughts on that?
I think you're 100% right. So we've invested and been part of, whether directly or indirectly, several hundred, projects right now. Whether it's coins, ICOs, whatever, right? So we made several hundred investments in blockchain space. So the best investment by far has been Bitcoin, to your point. So we've been talking about it. We've looked at it. We sat down about a year ago and we looked at our portfolio and we've ran the numbers, and surprisingly, or maybe unsurprisingly, Bitcoin always topped anything else. And not only that, but get this, it's the most liquid out of all of them too, right? So the question now is okay, why do you want to invest into all these high risk startups when you could just invest in Bitcoin? Because I think there's still room to run, right? If you follow stock to flow model, right, or if you do other comparative analysis, I think there's still room for Bitcoin to run.
The stock to flow model has been really on point, and in fact, you introduced me to some really smart guys in the hedge fund space, and their hedge fund is stock to flow is the name of their hedge fund, S2F. It feels like that has been very spot on with predictions. Are you a big believer in that?
Yeah. I look at it as a self-fulfilling prophecy. Enough people look at it and say, okay, this is the right thing, this is the model we will follow. It's going to happen, at least for a while. So I think that's what we're seeing is playing out right now. So sure. Yes, I am a believer because, it's one of the more popular ones. I looked at the kind of theory behind it. I agree with it somewhat, but it's also dependent, right? There's two variables to it, supply and demand. We know one, but we don't know the other one. It's an unknown variable, the demand side, right? We know that we know it exists. We know that it's growing. But beyond that, it's how much. Although, with everything being on blockchain, it is pretty easy to verify. So there's that.
We talked about it, and it made sense because I think it was right before the halving. And just taking a look at it, when I thought about it, I thought the chances of Bitcoin going to zero were not high. And I don't think the previous halving was priced in, right? I think when you and I were having conversations, Bitcoin was maybe $8,000 a coin. And Bitcoin and cryptocurrency are the most interesting concepts in my mind. I mean, the complexity of how deep you can go in any area and how completely disruptive this is to store of value, to finance, to banking, to almost anything. It's insane. As an engineer, you really are a deep dive into the white paper. I know you're wearing the white paper on your shirt right now.
Yeah,
I have
right.
one.
That's what it is.
That's Satoshi's white paper. I have one of those shirts. It's probably the softest shirt I own. That's your company. You build Satoshi t-shirts, right? Talk about that a little bit.
So one of the ways that, I look at and I think about Bitcoin and that whole space as well, like a movement, right? To an extent. And it's almost it's our civic duty to make other people aware of it. I think I think fundamentally it's an extremely important invention of the human race. Yeah, and it's the next iteration of the banking system, right? That comes with significant advantages over what we have currently. Centralized banking, all that stuff, and we can get into. See, the problem with talking about Bitcoin and crypto and blockchain is once you start talking about it, all the other topics go out the window, right?
Sure.
So I was thinking about save it for later, but since we're on it anyway. So not only are we investors in it, obviously, but I feel like it's our civic duty to make other people aware of it and what it is exactly. So as part of that initiative, we've launched Satoshi Inc, which is a designer label, whatever you want to call it. Right now we're just making T-shirts that look cool. You know what I mean? And I think it's a pretty cool design. It's all over print, white paper. So when I'm out in public, it looks kind of pretty. It just stands out a little bit. And people won't talk to you about it. It's oh, what is this? This looks kind of crazy, kind of cool. Tell me more about it. What it's about. you start getting to Bitcoin, you start talking about blockchain, and gets people excited. A lot of people learn about it that way. So I just enjoy doing it, and it's not like we're gonna make $1 billion selling T-shirts. That's not gonna happen. But as part of our investing initiatives, just to give back something almost to the community, this is the reason why I'm wearing it basically.
I was 50-50 to wear it for this, but I almost was sure you were going to wear yours, and I figured if we wore matching T-shirts, it would kind of look weird. But no, it is a great shirt. I think it's
okay.
cool.
We're coming out with a second version, so next time we can all both wear a Satoshi Inc shirt. That'll be different.
Can you do an all black one with white writing on it?
That's exactly what we're doing. Well, one of them.
Well, great minds think alike.
There you go.
That's pretty cool. So for predictions, not like financial advice for anybody, but what do you think the high for Bitcoin is going to be this year?
This year, I think we'll hit 100,000 by the end of the year.
I put my over-under at 122.
I will just say that we're going to hit 100 at some point, probably towards the end of the year.
Yeah. So here's a question for you. Do you think the next halving, the one that's coming up in about 3 years, is already priced in to the current model? Like, do you think this will be a different cycle than we've had in previous cycles because people realize, and there's like professional money, that the supply gets limited every 4 years?
So, some people will attribute this run to the happening that happened earlier. I think it's more of a case of a kind of correlation, causation, not correlation. And the reason why is because no one predicted the virus, no one predicted the quarantine and the closures. No one predicted that the Fed is going to print more money than has been issued in the entire history of the company, in the entire history of the United States, right? In like a year, just unprecedented numbers. So I think a lot of that led Bitcoin appreciating so much. And plus, you also got to factor in that the next happening is going to have exactly half the sort of impact that the previous one, and that did, because we just divides by half, so halfening. Whether it's priced in, it's I think there are other factors that are much more critical to what price of Bitcoin is going to be doing. Necessarily, not the happening at this point in time. Maybe before, because the numbers were a lot higher, yes. But as we go into the future, that factor is going to be less and less important, I think, in the price discovery.
What do you think are the most important factors?
It's a good question. It depends on where you live, and we have people like to shit in the U.S. dollar all the time, but we have the sort of the benefit and the privilege of living in this country where the monetary system may be a little messed up, but nonetheless, the U.S. dollar is a stable currency, relatively stable currency. You look at other countries, look at Argentina. I mean, they were like the Europe of the Latin America, of the South America.
Yeah, I mean, they were a wealthy country. I think a lot of people don't realize.
Now it's a freaking disaster. What's going look at Argentinian peso versus the dollar and other fiat currencies. It's been a mess. Not as bad as Venezuela, obviously, but if you live in Argentina and you don't have your investments in Bitcoin, and by the way, it's illegal to own U.S. dollar there, right? I think, or buy it. So you have to deal with euro dollars now, right? If we want to get into derivatives of the dollar system, which is all really messed up. It's like they basically invented, and right, this is what the euro dollars are. They're not real dollars. They're just backed by a proxy. So if you're living in Argentina, if you're living in a number of other countries where you buy a loaf of bread, for X amount, and then next week you got to come up with double, or you have to take the bus to work, and all of a sudden, it costs you half of your paycheck. It's not, it's not a good way to it's just terrible. So, if you live in any of those countries, it's a no-brainer, right, to own Bitcoin. I just absolutely know, and have some of your assets in there because now you're protected against the like massive hyperinflation that might be occurring. So again, you look at Zimbabwe back in the day. Look at Venezuela, even what's going on right now. Even Brazil, Argentina. I mean, if you look at half of the countries on the African continent, that's what's happening. This is the reason why India is trying to ban Bitcoin right now. I mean, it's such a powerful tool for everyday citizens. I've lived in Russia in the early '90s when we went through basically 2 devaluations. One day I remember waking up and my parents kind of scrambling to go to a local like a branch because they needed to exchange all of their rubles for new rubles. Think about that. You have one day to exchange all your money into new money, or they'll be worthless. One day, and you just found out about it the day before, and everyone else in the country. You know what I mean? Like,
that's insane. I mean,
that's an issue. That was an issue, right? And that happened again like 2 years afterwards, 2 years later. So the second time they did that. And then there was like massive inflation, so they had to, I remember it was kind of like, it was a joke almost, but they had to like lope off the 3 zeros at the end of the rubles because we had banknotes. So like every couple of years they're just like, okay, 3 zeros out. It's like, oh, it's $1 million now.
That's completely
1,000.
Wild.
Yeah,
that makes sense.
A lot of people don't realize it, but like having lived through that cycle, it was a little traumatizing, and it was, we made it out okay, thank God, and obviously also moved to the United States at the time, but there are so many people that are living out in the world. There's like 6.5 billion people, right? 7 billion. I don't even know what the total amount of the humans on the planet are. How many people are there in the United States? 350 million.
Yep.
So, how many people are in countries with stable currencies? Maybe 2 billion. You take Europe, Russia maybe, China, let's say stable, relatively Japan. So half of the people on the planet live in a regime where there's a stable fiat currency, more or less. So that means there's like 3 billion people living in countries where the currency is, forget it even being fiat, it's like total shit, right? So
even the relatively stable currencies, let's put the US dollar at like the world currency because we control all the naval routes and things of that nature. So you price in the US dollar. That's probably the best, or one of the 3 best. But we're still engaging in massive inflation, right? Like
but most people can't buy US dollar if you're not and you can only buy US dollar through a US bank, right? So that's why euro dollars exist. It's for people that can't get real dollars.
Interesting. So for half the world, Bitcoin is exponentially better as a store of value than their local currency.
Exactly. I would not be talking about predictions. I would not be surprised if, in 10 years, if you want to put a like crazy number on it, 10 years, half of the world is, using Bitcoin for store of value, and not even people in the United States. I'm talking about, every country in Latin America, every country on the African continent, half the countries in Southeast Asia. I think it's inevitable. Like as soon as you understand what it is, it's inevitable.
Yeah, I mean, I'm even looking at just in a stable environment, you're still historically seeing about a 200% IRR versus the US dollar from inception till today, and easily 100% IRR for the last 5 years since it's become worth over $1 billion, right? Like let's kind of bifurcate the life of Bitcoin almost like a company. And before you have $1 billion valuation, it's like an early stage company. There's a lot of risk involved with it. Once it hits $1 billion, it starts to get into kind of a different level. Even from $1 billion, like that's basically something in the neighborhood of like a $500 coin was about $1 billion, rough math. Even at that point till now, it's well over 100% IRR. I mean, there's almost no investment in the world that can match that, especially when you look at a Sharpe ratio.
Yeah, I mean, So I think what we're seeing right now is Bitcoin entering the next phase in its evolution. Going from this lucrative, highly speculative financial instrument to a more stabilized regime, right? Where the volatility is going to be coming down. And again, this is just my opinion. And I think what's happening, it's not going to happen overnight, but I think we've started entering that phase of Bitcoin becoming a more serious asset for corporations. For we're talking. I'm talking about Miami. Miami mayor came out, it was like a month ago, and said that he wants to buy it for for the city's balance sheet, which was unprecedented, right? I think a big favor to the feds for obvious reasons, right? Talking about the money printer. So what I'd like to see is that, get rich quick schemes. It's like one thing, but I want to sort of avoid that, right? And I think there's a misconception. So I think it's more important to treat Bitcoin going forward as this like store value. We're almost like, okay, let's not try to lose the purchasing power of the assets that we already have. Like if I'm an individual, right? And if I want to avoid losing the purchasing power of the assets that I've amassed, and that's my net worth, I would be locking them in Bitcoin instead of the US dollar. I would be locking them into equities, stuff like that. Maybe some real estate potentially. So that's how I would think about it. I wouldn't think about Bitcoin. I was like, okay, buy it at 60,000, and it'll go to 100 in a year, and I'll make it's. At least on my end, you know what I mean. I think the time, if you wanna have crazy gains like that, look at Dogecoin, right? It's
Dogecoin,
how much
Dogecoin,
crazy amount, right? I own zero of.
We had a conversation before the video about the fact if you invested 10 grand in Dogecoin last year, you'd have like $1.5 million today. It's like mind-boggling.
Crazy numbers, yeah. I don't know. And then listen, I would be the first one to admit, I don't like getting things that I don't understand, or don't fully understand. I don't claim to understand the, what's going on in Dogecoin sort of ecosystem, other than Elon Musk tweeting. But to be honest with you, I don't think he owns any either. I
think he definitely owns some. I mean, I don't think he created it, but I think
don't know
he
him
owns
personally.
Some.
I think my personal thought on it is, and I don't remember who said it. I was listening to another podcast, and basically their point was that it was his almost like a fuck you to the SEC, right?
Yeah.
And so the governmental authorities, because he can't say stuff like that about his own stocks. He can't really talk about Bitcoin like that. So the only proxy is, this instrument that was created just purely out of fun. So anyway, that's just my thought.
No, I mean, that makes a lot of sense. And it is a fuck you to anybody that takes finance and currency seriously, because it was created as a joke. It doesn't, I think Dogecoin was created in 2 hours, where they kind of copied and pasted the Bitcoin white paper, but it's centralized, it's controlled by people. In 2017, the founder even came out and was like, hey, I wouldn't really invest in this. We made it as a joke. And back then it was worth, I don't know, $200, $500 million. And he's like, I don't understand why people would buy this. Today it's top 10 most valuable cryptocurrencies. And before we hopped on, it's 40 cents a coin. It was 0.2 cents a coin or less a year ago. I mean,
yeah,
I don't understand.
I think that's a problem. That's it's a symptom of a much bigger problem, which is there's a ton of money in the world. There is so much money in the system. That's why the rates are low. We're looking at all these issues, and I don't know. We can talk about these things, I think, forever. It's I think there's also more important things, beyond that, right?
Yeah.
Bitcoin, what's good about it is sort of saving a lot of people from the inflationary sort of curse of the fiat system.
Right. It's a deflationary asset. I mean, it's hard money, or there's a million ways that you can talk about it, but it is a way that you could earn money and take that money and put it into a place where it doesn't get eroded by inflation. Hypothetically, not financial advice.
Yeah, I don't know. It's I'm kind of excited to see what's going to be going on 10 years from now. Like self-driving cars, maybe colony on Mars. We're going to have our own, Bitcoin like the Mars Bitcoin network, right? We're definitely not going to be using cash on Mars or any other planet that we're going to colonize. And I think it's inevitable. It's inevitable that we're going to colonize some planets.
So I'm super appreciative of your time. I mean, I know I've ran over an hour and we scheduled for an hour. Are there any things that you want to talk about or kind of that you think are really important that are going on in the world of investments, your life? I mean, I know you just had a second child. Anything else you want to kind of chat about?
No, I mean, listen, it was good to obviously can't wait to see you in person again.
I miss you, man. It's been a while.
The vaccines are rolling out. The quarantine is sort of getting resolved a little bit. No, it was good. I mean, this went by super quick. I think the one point I would make is we're like, why are we trying to make all this money and kind of figure out how to avoid the dollar issues and all this all the stuff. I think it's to do something else with our lives, right? Like for me at least, I like climbing mountains and doing some mountaineering work. Having kids. So there's life beyond Bitcoin, right? So
what do you consider to be success? I mean, obviously you've had extreme financial success, but how do you define success for you personally?
I think it's different for different people, right? So for me, listen, right now I'm living like in this crazy like situation. So for me it would be, I just had a kid second kid couple of weeks ago. So, just spending more time, and they grow so quickly. It's, my dad, he worked so hard, and I haven't had a chance to like spend a ton of time with him when we were growing up. So definitely spending time with the kid. And you only realize that after they grew up. But I don't know, spending time with friends, spending time with kids, spending time with people you love, and like if anything, this quarantine taught us that like you can't do everything online and over Zoom, right? You gotta we're a species that are sort of evolved to like interact in close proximity. So doing trips with friends, going to like hikes in mountains. Speaking of, we're doing Elbrus next year. So if you were
is it a hike or is it a climb? I feel like I'd be up for a hike, but I don't want to like really like kind of like climb a mountain.
Yeah, I tried to come back alive, so we avoid the technical stuff. If we just a long walk up, but it's good because it allows you to like we had multiple conversations on that topic.
Yeah.
But allows you to think about, and when you get out into the world, like into just nature, mountains, oceans, whatever, like away from civilization, you realize that a lot of the stuff doesn't matter. So what matters.
Have you ever read the book Shoe Dog by Phil Knight?
I started reading it. I'm like a couple of paragraphs into it.
So this isn't to spoil anything, but Phil Knight created Nike. For a lot of people that don't realize, Nike was an early stage startup at one point. Like it was run out of the back of his van. And Phil Knight kind of attributes an epiphany or a tipping point for him when he climbed a mountain in Japan. I think it's like Mount Fuji. And he kind of attributed like getting up there for like the sunrise and hiking overnight is like a very big tipping point in his life and for him and Nike. And so you're not the only successful entrepreneur to really value that type of thing.